Pete, you want to start?
I'm going to start by asking questions from the audience.
Well, I want to ask one first. Thank you for your kind
Wait a
words.
minute, you're about not to be the executive director. So
I still am.
Your authority is far less than it was in the past. I just want you to know.
Can't kick me out yet. I want to pick up a question on Jean-Claude's last and crucial point about the governance of the Eurozone. You've made a very creative proposal, but we don't have it yet, and we have not had it through the crisis. It is therefore my conjecture that the ECB has filled the vacuum by functioning as the main governance unit of Europe. Most dramatic case was when you and your successor sent the famous letter to Prime Minister Berlusconi. It led to the change in government in Italy. It led to the change in policy in Italy that is at least offering a prospect for recovery in that country. But here's my question. On the view that it is the ECB that has functioned in the vacuum as the decisive economic governor of Europe, is it true that the goal of the ECB was not really to overcome the crisis in any short-term sense, but rather to use the crisis to promote fundamental adjustment of the debtor countries so as to put the Eurozone on a more long-term sustainable path? Obviously, you had to play that carefully so as not to trigger an apocalypse. I would submit so far you've done it pretty well, but the basic question is the fundamental objective of the ECB acting for Europe, to use the crisis to try to strengthen the economy for the longer run.
Well, I would present the situation in a slightly different, under a slightly different angle. We were and are the only executive federal institution. That's clear. We have a single monetary policy, a single currency. We have goals that have to be attained at the level of the euro area as a whole. I mentioned already a number of those goals. Our primary mandate is to deliver price stability. By the way, I mentioned the fact that the European public opinion is extremely attached to price stability, and all the public survey we did is demonstrating that there is practically no difference between the various public opinion. That is something which is also important. So the trust in the central bank depends extremely profoundly on this capacity to demonstrate that we have, as I said, a needle in our compass. But that being said, being the only federal institutions in Europe, being the institution that could observe what was going on the market at global level and European level, which is not easy to devise when you have another angle of vision and understanding, we had to play de facto a role of shipping messages permanently to governments and to other institutions. That was part of our own positioning. We could not do otherwise. We were not dictating anything, and it was always messages. It was one of the messages was when participating in the Euro group, we said very clearly that for us and for the treaty, the Stability and Growth Pact was absolutely essential at a moment where some governments were, as I said, on a totally different line. And we were strong on that, not imposing anything. We could not impose anything, but on the basis of our own analysis and understanding of the situation. I circulated myself, and I'm sure that Mario is doing the same, the evolution of unit labor cost, evolution of a number of nominal evolution in the various 17 countries, months after months. and saying, look, some of these evolutions are suggesting that some countries are going in the wall. It was not in the treaty that we had to say that. It was not in the treaty that we had to mention to any particular government or to the euro area as a whole this kind of observation, because we are supposed to look at the euro area as a whole. And as I said, for the euro area as a whole, we have delivered, obviously. But we considered it was also our duty to mention things that were of great importance for the cohesion of the system and were clearly in the camp of and under the responsibility of the economic union. And it is true that we were in a situation where it was natural for us to do that. So I think we should not overdo our own, I would say, influence. We were perhaps influential in some domain, very poorly influential in other, unfortunately, because had we more influential, perhaps we would have avoided some major difficulties. All taken into account, it seems to me that we were clear enough in our own interaction with governments and with the European Council and with the Parliament. I mentioned the Parliament as a major partner in all this period. We were clear enough that everybody could understand when we were really in our own domain of responsibility and decisions, and when we were shipping messages to various partners.
Follow-up question. How would you use the current crisis in Greece?
How would you use the present crisis in Greece? You being the ECB?
Yes, to promote fundamental adjustment in Greece, taking into account the domestic political situation in which they find themselves.
I mean, the Greek case is very clear. You have the IMF and the IMF conditionality and the support of the international community, all countries in the world. You have the support of the countries of the euro area and the conditionality, which is totally coherent with the conditionality of the IMF. We participated as the ECB in the so-called troika in this work, but we take no responsibility ourselves in this negotiation, which is really the negotiation of the IMF on the one hand and the negotiation of the Commission backed by the Council on the other hand. And all what we have to do and can do is to back as strongly as possible this idea that there is an absolute necessity, of course, to adjust because it's in the interest of the Greek people, it's in the interest of growth and job creation in the medium run. And in any case, we are in a world where you cannot eternally spend more than you earn. As simple as that. It is true for all of us. You cannot eternally spend more than you earn. All advanced economy, in my opinion. Again, it's a crisis of advanced economy. And as I said, the other continent had to accept that at a moment or another moment. But we really are at stake. But this is an exemplary case, if I may.
So should the ECB stop supporting the Greek banking and financial system if they fail to reaffirm their commitment to the adjustment program?
ECB will apply, as it has always done, its own rules.
I take that as a yes.
The ECB will apply its own rules.
Okay. Pete, we'll open it to the floor.
Please.
Questions? Jacob, please identify yourself. There's a hand mic coming around, or you can go to the two standing mics. Identify yourself, where you're from, and fire away.
Thank you. Jacob Frankel. Thank you very much, Jean-Claude, for this fascinating reminder of that what is now self-evident and clear was not so a decade ago. My question really has to do with the sovereign debt. It may sound like a financial technical question, but I think it's more than that. As we know today, sovereign debt within Europe has very large spread among themselves, highlighting the fact that Greece is not Spain, Spain is not Italy, none of them is like France or definitely not Germany. Yet, for many years, the market failed to price those sovereign debts as being very different. The question is, first, what served this? Why did it happen, and what was the wake-up call? And second, during the many years in which sovereigns were viewed to be the same, critics argue that this served as an enabler to irresponsible governments to continue borrowing without the market discipline, because somehow the spreads did not come back to them. Where are we about it?
I fully agree, of course, with your presentation. We have experienced a period of benign neglect that has been generalized in Europe, and I have to say generalized in the world. The idea that sovereign risk in the advanced economy was totally eliminated was, again, the global consensus until the present crisis. The formidable benefits that we can draw from such a big crisis, an intense crisis, is that it is a scanner which permits to see exactly what are the weaknesses. And it's absolutely clear that now we have to consider that there is no sanctuary as regards the creditworthiness of the sovereign signature. There was no sanctuary in Latin America or in Africa or in the Middle East or in Central and Eastern Europe or in Asia. Now it's clear. The advanced economy themselves have to accept that they have to prove, maybe not today, but certainly at a certain moment tomorrow, that they are on a sustainable pace. Because at a certain moment, the investors and savers would not accept to finance eternally an unsustainable pace, which would be and is obviously has been the rule for a number of advanced economies. So my understanding is that under the dramatic shock of this crisis, we are now in a new world. And of course that has a lot of consequence, because if there is no ex ante full creditworthiness given by markets, by savers and investors the world over to the public authorities or the major public authority, we will not be able to block a new crisis of the dimension of the present one. Let's not forget that I mentioned, because time is constrained, I mentioned the augmentation, the increase in the volume of the balance sheets of the central banks. But I could have mentioned the decisive action of governments. In the ECB, we had computed, it seems to me that it was mid-09, the total amount of taxpayer risks that had been put on the table on both sides of the Atlantic to, arrest the tsunami, the house of cards collapsing at a global level, and all taken into account, you name it, the recapitalization, the guarantees of all kinds, the toxic assets, I would say, decision taken by Congress and so forth, you arrive at a level of 27% of the GDP on both sides of the Atlantic. 27% of the GDP. Not challengeable for 1 second, as good as gold by the investors and savers at the time. The best example I have is Ireland. Ireland decides to guarantee its own banks. All the capital are rushing out of the continent and of the UK to go in Ireland, in Dublin, with the idea the Irish signature is much, much better, of course, it goes without saying, than any private signature. We are now in a different world. And I count only the legal guarantee, the 27%. I don't count the blanket political guarantee, which was given by whole heads of state and government of the major advanced economy, according to which a collapse of a systemic institution was totally out of scope. It was not a legal guarantee, it was a blanket political guarantee, but given by all heads of important advanced economy. And that would represent 100% of GDP, because the size of the balance sheets of these institutions, the institution concerned, was of course gigantic. Again, not a legal guarantee, but a blanket political guarantee. So I really think that the window of opportunity that we have now to put our house in order, I have to say, we have the sad privilege to be the epicenter of the crisis of the sovereign risk in the advanced economy constituency. All this has to be done in an orderly fashion. And if there is a question on austerity versus growth, I could respond on that, because it seems to me that it is part of the issue, of course.
Kyle?
Jean-Claude, I find your proposal of activating the federation by exception between Council, Commission, Parliament very attractive, particularly if one accepts, which I certainly believe, that fundamentally the origins and the evolution of the crisis is a crisis of governance in the European Union. The very poor interplay between a strong ECB, a strong leadership, and a weak Commission, and frankly a rather confused Council. So I wonder whether you could develop your thinking on governance strengthening or reform a bit further beyond this proposal you made. Wolfgang Schäuble has just these days, in accepting the best prize in Aachen, suggested that this Greece and all the rest should lead even faster to governance reform, very much along your lines. And he suggests that we should have the Commission President elected by parliaments very soon. I think that would go a long way in redressing the imbalance that I think, as an integrationist rather than intergovernmentalist, of strengthening the Commission and, in fact, enabling proposals like yours. Could you elaborate that a bit further? When I think back to the long night you referred to, where we weakened the Stability Pact in the Eurogroup, unfortunately my country was involved, we could see the weakness of that governance and of the decision-making formula that your proposal, perhaps with more legitimacy added to the Commission, could have avoided.
I feel very, very fully in line, of course, with what you just said. I had no time to read the speech of Wolfgang Schäuble, but I know what he had in mind, so I'm not surprised by what you say. It seems to me that we clearly have to consider the Commission as the anticipation of the executive branch, the Council as the anticipation of the upper chamber. The Parliament already exists, so the lower chamber already exists, and we already have, I would say, equivalent of a higher court of justice, which is imposing jurisprudence at the level of Europe as a whole. So we see the constellation of institutions which is at stake, and it seems to me that this kind of federation the federation would be full-fledged in certain domain, in my opinion. In the permanent regime, you would certainly have a responsibility at the level of the federation for the financial sector, because we have to decouple the financial sector from the various sovereign. It seems to me that it is part of the better functioning of the euro area. I'm of course mentioning the euro area in the traditional way as if it was, coextensive, if I may, to the European Union as a whole. I do not forget, of course, that this is more complicated than that, so we have permanently to reflect on the interaction between the 17 and the 27, or between the 25 and the 27, taking into account that two countries have an opting out clause and are in a different legal category. But elaborating a little bit on the same idea, for those extraordinary decisions that would be taken at the level of the center, if I may, with full backing of the lower chamber, we could even imagine that we could have the voting procedure in the council, which would act as the upper chamber, different from the present one, which gives, of course, a decisive influence to the big countries, as is already the case in the parliament. So it would perhaps be something to reflect upon. But again, I trust that to the extent that it is likely that, again, we will not necessarily have an imitation of the United States of America, because Europe is Europe and has a different history. This idea of activating the center only when needed also goes with the so-called subsidiarity principle, which is at the heart of the European construction. But again, we are all learning by doing, and I fully accept that even if, in my view, we are not for a proposal of that kind, that in a new concept, which is not that different from what we have in the present treaty and in the Stability and Growth Pact, because again, you can fine a country, the parliament of which has not taken the right decision. So it goes already very far. And you can do that and fine the country without obtaining what you want, namely that the rest of the euro area is protected against possible aberrant behavior in one member country. So again, I trust that you have a lot of argument to defend the position. I would love that all countries would reflect upon our long-term future, because it's time now. We had the benefit of the crisis. We see what are the weaknesses. And I have to confess that some countries are more advanced than others in this reflection, meditation on the long run.
Peter Orszag?
Thank you. I wanted to return to perhaps traditional monetary policy for a second. And your statement that it was effectively equivalent to say, we're in favor of medium to long-term price stability and we'll keep nominal rates low in the meanwhile, is effectively equivalent to, we're going to keep nominal rates low, and by the way, we're in favor of medium and long-term price stability. It strikes me that those are actually quite different things, because the reason that market participants are always parsing exactly what central bankers say or trying to examine the how wide Mr. Greenspan's briefcase is in the morning as a hint, is they're trying to guess at what the central bank will do when the world doesn't turn out exactly as expected. And so by leading with one rather than the other, isn't there actually more difference than you were suggesting?
If you take the concept that we are applying to the letter, you have an enormous difference. Again, we are saying very clearly our interest rates are designed to deliver price stability in the medium run. We always said in the medium run. And in the medium run, our track record is 2.03%, which is a little bit different from less than 2, close to 2. In the next 10 years, it is more or less what we extract from the market would be 1.9, which would be fully in line with the definition of price stability. If I understand well, but I'm speaking under the control of eminent Fed representative, in the US, the idea is we will maintain rates at low level for a considerable period of time, unless there are reasons not to do that, if I understand well. And I think that when you reflect profoundly on that, perhaps you see that it's not that different, obviously, because you have this exception clause, which is repeated by the Fed chairman. So I guess I'm from time to time I'm wondering, whether the fact that we are plunged in different culture doesn't play a role. It might be different in the US to say we will maintain rates at a low level during a considerable period of time. But, of course, if need be, we would be in a different universe. We do something different. Perhaps it is accepted in the US culture as much better than to say, we will in any case deliver price stability, you can trust us, and therefore, of course, the medium and long-term inflation expectations would be fully in line with our definition of price stability. By the way, there has been an immense convergence between the US and the euro area because we have exactly the same definition of price stability. I mentioned that en passant. You know, we say less than 2 but close to 2, and the US Fed says, again, under your control, 2 or slightly below 2. Again, I don't see, in this case, I don't see any semantics difference.
Okay, I saw a couple of hands. Dick Cooper.
I want to come back to your proposal, which I think is both ingenious and far more radical than you let on. You say it's just an evolutionary step from what you already have. It amounts to putting a state into receivership. If you draw a analogy to bankruptcy code, you say you've reached such a state that, and you've demonstrated that you cannot manage your affairs on your own, we're going to appoint a receiver. It's worth asking the empirical question, what does that look like around the world? We have no such provision in the United States. There is no provision for the federal government to put a state. States can put individual cities in receivership, but the federal government cannot do that. I think I'm right in saying that neither Canada nor Australia have any such provision. India does have such a provision. The Union can put the individual states. China is not technically a federal country, so they can do anything that the standing committee decides. Kaio can tell us about Germany. I'm not sure whether the federal republic in Germany can put an individual land in receivership. It is, I think, a very radical proposal, couched as simply a modest step in central banker fashion from what we have already. So that's some observations, and my question is, given the way the European public has treated constitutional proposals in the past, what do you think the chances of this particular one proceeding from concept to reality are?
First of all, I fully accept, of course, that this is something which has not been largely explored. Can I mention that the single currency decided by the number 3 country in the world, in the advanced economy world, the number 4, the ex-aequo, the number 6, the number 7, and number 8 has never been experienced either. So we are experiencing something which had never been experienced. We are doing that. So it's not an argument to say it's never been done. The quid pro quo is paradoxical there, because it is precisely because you do not want, or you consider it's unlikely that you would have the equivalent of the US Federation or the equivalent of the German Federation and so forth, that you have to respect more, if I may, the influence of the states, but at a certain moment, exceptionally, this statal influence, the country influence, can be disruptive at the level of the system as a whole. So you have to choose there. Either you consider that it is time to shrink the states and the budget of the various countries and create a very big fiscal position at the level of the federation, or you consider that it's better precisely to let them have their own responsibility, which are big, but to have a way of protecting the system against possible counterproductive behavior. I fully agree that it is something which is difficult. I have to say that I made that proposal before we had the present Greek problem. It's not after the present Greek problem that I made the proposal, but before. I remain very, very strongly of the opinion that not only for fiscal position, but the Greek problem is much more, in some respect, the fact that the nominal evolutions, the unit labor cost, and a number of cost and price evolution have behaved totally independently of the fact that there is a single currency which has an international cost and an international purchasing power which is defined at the level of the continent as a whole. So the fact that you would have this tool to prevent part of the euro area to behave in a disruptive way seems to me necessary. Again, we will see what happens. The main criticism is it is not democratic, and that the reason why I consider that the full involvement of the European Parliament, which is elected by universal polling, which has a legitimacy, which is the legitimacy of the continent as a whole, and the fact that the various representatives of the European people would assess the situation would prevent, I would say technocratic or anti-democratic move, in my opinion. At least you would have the real checking with the representative of the people. But the simple fact that you are in a single market with a single currency create a level of interconnectedness that has to be taken into account seriously, particularly, of course, in time of acute crisis, but in the long run, it has to be seriously taken into account at the level of the institutions themselves. And that's my profound, intimate conviction.
Ted Truman, and then we'll take a break, have a few drinks, come back for dinner, continue the conversation later. Ted.
Jean-Claude, it's a pleasure to see you here after I too have had many years at your side and learning at your knee. I'd like to take you back sort of where you started your remarks, and because you linked together the where we were from August of 1907 to today, and ask you to comment a bit on the question of sort of we've had two epicenters in your terminology. We had one epicenter here, right, at the beginning, and now we have an epicenter in Europe. There is a view, and I'm asking you as a knowledgeable European, there is a view that the second epicenter was essentially caused by the first epicenter. And if we, the United States, had just run our business right, all manner of business, whether it's regulation or macro fiscal policy or monetary policy right, then none of this would have happened in Europe. And so therefore, the Europeans can blame the Americans for the last 2 years as well. So that's a common view, at least I hear from some Europeans. Maybe I speak to the wrong people. So I'd be interested, given the nature of this audience, which is mixed, for your views on that sort of how these two pieces of the crisis have played off each other.
Well, first of all, I have to say that the fact that you have the sad privilege to be at the epicenter of the crisis, which was the case of the US for the first episode, subprime, I would say mid-07 up to mid-September 08, and then mid-September 08 up to end of 09. And then we had the third episode where the epicenter crossed the Atlantic because we were in the realm of the sovereign risk crisis. I would say those in Europe who were saying that it was not a European problem at all, that it was the US problem in the first and second episode were plain wrong, of course. It was the US problem and it was our own problem. As I said, on both sides of the Atlantic, you had to put 27% of the GDP on the table to arrest the tsunami. And so it's true that the epicenter was in the US. It's also true that we are so intertwined, so interconnected, that we were fully, unfortunately, participating in the fragility of the world. I would say, equally, those who are saying in Europe, it's not our problem, it's because of the US, are wrong in my opinion. Because the crisis, it's true that if the crisis had not been there, we would not have this scanning, this X-ray of our situation. But the situation was not appropriate at all. And in a way, it's a chance for the Europeans to see that they have to put their house in order and to make a quantum leap in terms of governance, economic governance. On the other hand, it would be equally misleading, in my opinion, for the other advanced economy to think it's only a European problem. It was plain wrong for the European to say it's only a US problem, but it would also be plain wrong to say this sovereign risk issue is only a European problem. In my opinion, it's a crisis. It's a crisis which is hitting all the advanced economy, and there is somewhere, very unfortunately, in the euro area, an epicenter. But houses have to be put in order everywhere in the world because there is no more privilege which is given ex ante to any particular signature. The signature have to prove. I have a last point, if you permit, Fred. When I look at the advanced economy, which advanced economy proved incredible resilience in the crisis? Sweden, Canada, Germany. Why? Sweden had a dramatic crisis at the beginning of the 90s. They put the house in order. And house in order meant 12 or 13% of diminishing of public spending as a proportion of GDP. I mean, it was very, very strong. And the Scandinavian in general, but in Sweden particularly. Canada, it's very surprising. Canada is resilient. It's very close to the US. Interconnection is very, very important. Canada was in a dramatic situation at the end of the 80s, put their house in order, took a lot of time, but proved an incredible resilience. And Germany had the reunification, an immense increase of costs in Germany, which was normal after reunification. Then, of course, hard work being done practically during all the time of the euro, with unit labor cost being moderated, and very tough decisions taken, 3% increase of the VAT, with a full agreement of the left and the right, and finally, resilience in the crisis, which is so obvious. But the three countries did the job before. And we are protected from drama in the present episode of the crisis because they had done the job before. I mean, protected not entirely, of course, particularly in the financial crisis, in the first episodes.
Jean-Claude, we have deeply appreciated your wisdom. We will now take a break to have refreshments. I invite you to go out onto the patio in the back. Drinks and hors d'oeuvres will be served. We will come back for dinner in exactly half an hour, 7:30, and then we will shift a little bit into a dinner that will honor Jean-Claude with some remarks from some very prominent folks that are part of our group tonight. So let's break for the moment. Jean-Claude, thank you. Thanks again to the Niarchos Foundation.